Good evening, folks. Michael Zuber, one rental at a time. This is your daily financial news for November 8th, and these are the 5 things that I think you must know today. First and foremost, let's not forget today is Election Day. If you are watching this from the great country of the United States, make sure you get out and vote. It's something we all should be doing. Make sure you get out and vote for who you think should be there, all of the propositions and those things. So today is Election Day. Exercise your right to vote. Election Day, midterm, we shall see what happens. My hope is we once again have a split government with the Republicans taking one or both of the House and Senate. I frankly don't care which one. I just want a split government so we get 2 years of nothing. We get no more congressional spending. We get no more craziness. We get no more this, that, the other thing. Anything that gets done the next 2 years will be agreed upon by both parties. Shh, don't tell anyone. That's how it's supposed to work. So again, it is Election Day. Make sure you exercise your right to vote. I do expect the market to react on the news if it goes the way as expected. But hey, let's wait till all the ballots are counted and we can talk about it hopefully tomorrow morning. Next, I do have a question. It looks like Musk's acquisition of Tesla more coffee. Looks like Musk's acquisition of Twitter might be hurting Tesla. First and foremost, I thought this was possible. Obviously, he had to sell shares to raise capital to make the acquisition. That was done months ago. But it looks like Musk is tweeting out things, and I don't know. Do you guys think that Musk's acquisition of Twitter and his tweets could actually be hurting demand for Teslas? Don't know. Don't own any Tesla stock. Frankly, would never buy Tesla stock. I don't get it. I don't understand it. But when the CEO puts stuff out that maybe angers half the population, I wonder if we could see cancellations and demand fall off. Oh, by the way, we are having a recession, which again, Teslas are not cheap. So we are already having that issue. So again, just curious. Let me know what you think. Would you cancel a Tesla order? Are people canceling Tesla orders? I have no idea, but I saw that tweet about voting Republican, and I'm like, that is probably going to piss some people off. Don't know. We'll see. Next, housing market. I got some great information on the housing market. There are some people you should be following on Twitter. I believe this one came from Lance Lambert, who is a Fortune editor. I am trying to get on the channel. Secret? Shh. I'm trying to get him to be a weekly guest. Shh. Wouldn't that be cool? Get a Fortune editor on the channel every week. Fingers crossed. We're looking for Thursdays. Hopefully that'll get ironed out shortly. But why is this important? Consumer confidence in the housing market hits an all-time low. Hits an all-time low. Why am I getting excited? Because hopefully if you follow this channel for any length of time, I like to do the opposite of what the herd is doing. 84% of people think it is a bad time to buy a home. To which I say, awesome. I love the lack of competition. Folks, housing is not stocks. It is an asset traded on imperfect information. And if you spend the time, you do the work, you have a buy box, you have an unfair advantage. That is why I was able to buy a property on market, on the MLS, for a 25% discount, which I will take all of you through the process, where I hopefully will make north of 30% on my money. You saw me talk about it yesterday. In addition, if you watched my video with the hub, which goes out I record 9 a.m. on Mondays, I talked about how I plan to invest $1 million. Go back and watch the video. There's a playlist called The Hub. That 30-minute video, about the first 10 or 12 minutes, I lay it out for you. $500,000 this way, $500,000 that way. Again, I'm getting excited. When everybody runs away, I run in, and I am happy to say 84% of people think it's a bad time. I'm not paying list price. I am only buying great deals. I will write a lot of offers. I don't care. I will do great deals. That's the attitude, the mindset, all because I have a buy box and daily discipline. It is that simple. If you want to run away and hide, by all means, watch Netflix. Fine with me. I'm going to be shopping. I'm going to be writing a lot of offers, and we are going to have a lot of fun on this channel. What else? 37% of home buyers think that prices will drop in 12 months. Awesome. Keep believing that. That keeps competition away. This is exactly what I want. I want less competition. I want to be able to find motivated sellers easier. And this is the time. 84% of the people are not in the market. I like it. I'm getting excited. I don't know if you saw the video from Greg Dickerson yesterday. He's excited. Again, the people that operate differently from the herd get excited. Sacramento. This one came from, I think I wrote it down, Ryan Lundquist, Sacramento appraiser on Twitter. Shout out Ryan Lundquist. He talked about Open Door in Sacramento. If you follow me on Twitter, you know that I put out my list of housing markets that will crash. Number 1, iBuyer-dominated markets. Just for the record, if you don't follow me on Twitter, number 2 was Airbnb-dominant markets, and number 3, I forget what I said for number 3. Follow me on Twitter. Tell me what it was. I don't want to misspeak. In the end, number 1, iBuyers. Sacramento, Open Door, 76, folks, you can't make this up. 76% of Open Door's current, like yesterday's, active listings are under their acquisition price. If you are a flipper and 76% of your active listings are under your purchase price, you are, yeah, I didn't say it out loud, but most of you know what I just said. That is not good. 76%. Open Door will be closed door. You can't run a business this way. 76%. Say that again. 76% of your active flips are under your acquisition price. That is why iBuyer markets are going to get hit hard. If you're a buyer in one of those markets, I suggest, like some of my students are doing, get a filter for Open Door, put a days on market about day 60, day 75, and say, write a stupid offer. What is stupid? I don't know. Know your buy box. It's certainly not 10% under list price. If I was on an Open Door property, just for example, Fresno, California, my buy box. Let's take the house I just bought. Let's say Open Door was trying to sell it for $299, which is the price I will be selling it at in hopefully 2 weeks, maybe 2.5 weeks based on weather. So Open Door is doing it. It's not selling because Open Door didn't do what was required. I'm spending about $28,000 in 2 weeks to do the right things. They would not. They would do $5,000 of lipstick. They put it on there. It's on the market for 60 days. I would write my first offer probably at $200. Open Door certainly would have a price drop at some point, probably to $269. My next offer would be at $190. I would not let off the throat of Open Door. They are in trouble. They are also a public company. It's not a homeowner. Why is that important? I was buying lots and lots of foreclosures in the last crash, and what you learn are banks are not emotional. There is somebody at corporate sitting with a spreadsheet with all of these listings, and they have a column that says days on market. I am certain that that person sorts that spreadsheet by days on market, and some management, some director dweeb says, sell that one, right, with the highest days on market. As a buyer, use that to your advantage. Write lots of offers. Follow up. I can't stress this enough. This is not a business where you write one offer. Write one offer, get told to F off. Write your second offer, get a counter. Write a third offer, maybe get an agreement. This is a business that takes persistent, it takes work, it takes effort, it takes follow-up, but it is amazing. When 84% of people say it's a bad time, I am excited. Just do the work. No good deals. Only great deals. And if you don't know what that is, you haven't done the work yet. Don't gamble. Don't gamble. Chamath tells us we might have 2 years of this. And as you'll see in a minute, Goldman Sachs thinks this might go out to 2026. That's 4 years, folks. So why don't we talk about Goldman Sachs? Shout out to, I think this was once again Lance Lambert, Fortune editor. Again, great follow on Twitter. I think his handle is News Lambert, but I could be wrong. I want to make sure I get this right. Where is it? Goldman Sachs was asked, where do you see median housing price, aka value, by 2026? Not 23, not 24, not 25, 2026. To which Goldman Sachs has now saying, we expect real estate prices by 2026 to median home price to be down somewhere between 7 and 8% by 2026. Basically, what Goldman Sachs is saying is, yes, housing transactions are going to crash. They are going to be abysmal. They're going to be terrible. But what they are saying is, hey, prices, not so much. You might get 1.5% decline year to year until 2026. I would argue that matches my call of flat. Again, 2026. We're not talking 23 or 24 or 25. Folks, there's a lot of people that just look at the housing market and then make assumptions like we are still going to do 6 million transactions. That's simply not going to happen. If you were to tell me, Michael, we are going to do 6 million transactions in 2023, I would agree with every crash bro on the planet. If they could tell me we will do 6 million or more transactions, I will totally agree with everyone. You are right. I believe that is your fatal flaw. We are not going to do 6 million, 6.2, 6.5. We are going to do 4, 3.8, 3.7. And at that level, you don't need big price drops. You need some cash buyers. You need some out of the country buyers. You need some people moving homes. You need some 1031 exchanges. Activity is just going to dry up. And as we talked about in the hub yesterday, again, watch that video, there are already real estate agents quitting and getting a job, getting a W-2 gig. Folks, I've been telling you the housing slowdown is coming. I hope you are ready. Again, I am getting excited because I have been here before. I have seen the people who thought it was easy leave. That is awesome. I told you 2 years ago it was the best time to flip. We did 50 some odd flips. I stopped flipping 9 months ago, 10 months ago, because the market got wonky. I am now fishing for amazing deals. If you want to do stuff like this, you have to do the work. No gambling. Link below, how to get started one rental at a time. Join a private Facebook group with thousands of other people doing exactly the same thing. No better deal at $320. It will require you to do the work. If you want to do the work, let's go. 84% of the people gave up. Are you part of the 16 or are you part of the 84? That's up to you. So that's what I got for the 5 things. Some bonus information on earnings. Take-Two Interactive, missed on revenue, lowered guidance. TripAdvisor, missed on earnings, but blamed the strong dollar. Their stock got hit hard today. Five9, this is the one I believe where the CEO quit out of nowhere. They hit revenue, but had a very, very weak Q4 guidance. And Groupon, I haven't even heard of Groupon in a while. They missed top line, missed bottom line. Planet Fitness, shout out Planet Fitness. Planet Fitness had membership record high and record number of trips to the gym. Folks, the pandemic is over. People are getting out in the gym and getting healthy. Peloton, gym membership up. That is awesome to see. And Lyft, looks like Uber is casting a huge shadow over Lyft. And Lyft had slowing revenue, rides below pandemic levels. Not a lot going on there. Last thing to say, Open Door again. I just want to say that stat one time. And again, shout out Ryan Lundquist, a great follow on Twitter. I think his handle is Sac Appraiser. I think. I didn't write it down. 76% of their active listings are under their acquisition price. If that doesn't scream pain, in fact, if you guys haven't seen the Rocky movie where Mr. T says pain, that's all I can think of when I see that statistic. So folks, have an amazing day. Hopefully we can get Lance Lambert, Fortune Editor, every week on Thursday. Good karma. Let's see what happens. Take care. Bye-bye.